We'll let a few more people in, and thank you guys for joining us. I'm pretty excited about today's call. Of course, I think if you've been on the calls, you know that I get pretty excited about all the calls. So happy to have you. And my good friend for over 30 years, Don McGlinchey, is our guest speaker today. And it came about, we were talking about, and I want to make sure we start the call with this. First, if you're new to the call, welcome. Anybody's welcome to come on this call. We don't talk about company. We don't recruit. We don't sell anything. The only people allowed to sell things are the people that are the guest speakers, and they only get to sell for a few minutes before we tell them to stop. So we want everybody to feel safe here. Doesn't matter how much you produce or if you produce or what part of the real estate industry you're in. Title, escrow, mortgage, home warranty, inspection, insurance, whatever it is, you're all more than welcome. So thanks for showing up. So we've been talking over the last several weeks about pretty much since the beginning of the year about how we can list more homes or how we can help buyers get into homes without the big fight about, multiple offers and things going hundreds of thousands over. And depending on where you are in the country, the one thing that is common throughout the country right now, and even in Canada, is the lack of inventory and lots of buyers wanting to buy and no inventory to sell them. And so the problem has been that we are all, as real estate agents, and certainly I coach with a coaching company, and is how do we step outside of the box and figure out ways to create more business for ourselves and create opportunities for our clients. And the one thing that I knew about Don, he's done loans for me and my family for, like I said, over 30 years. He does know and does a lot of reverse mortgages. And we started talking about reverse for purchase and how understanding reverse mortgages at a high level can actually help buyers and sellers. And so I invited him on the call today as a way to look at further brainstorming and stepping outside of the box about selling. So Don, welcome to the call. Tell us a quick 30 seconds about your story, how you got started in loans and all of that, and then let's jump in.
Okay, can you hear me there?
Yeah.
Okay, great. Yeah, it's a little over 30 years, Rick, that we got together. Seems when you're in that small office of good real estate. But yeah, I've been doing mortgages. I got my real estate license when I was very young, and I decided to go into the mortgage business. And I've been doing this now. It's my 32nd year. I've been with Cherry Creek Mortgage for 20 years, and I've been in the Pleasanton area and East Bay all that time. So yeah, the reverse mortgage is fairly new to most people. I did my first one 20 years ago, but I do forward mortgages. And I think I'm very excited that you want to talk about reverse mortgages because there's so many misconceptions but yet opportunities, because most people, their first impression is it's not good because they have historical, perspective. So I'd love to tell you a little bit more, and I think it can really help real estate agents improve their business and help your clients retire earlier and better, which is awesome, helping people, right? Rick, can you hear me?
Yeah, we can all hear you.
Absolutely.
Okay, well, I'll be happy to talk about it if you want to. I can give you kind of an overview about it, and we'll go from there, or what do you want to do?
Well, I mean, I had seen that you had clicked on sharing the screen earlier. Did you have something you wanted to share with us, or would you like me to?
No, I was just messing around. I was just going to give you a little quick overview, if you don't mind, about how it works.
Yeah, let's start with this. When reverse mortgages first came out many years ago, everybody thought they were like snake oil, right? Like,
Right.
I'm going to lose my I'm not going to have anything left to leave my kids. I'm going to lose everything. And then there was a period where I don't know how many years ago that it became an FHA product and it completely changed the reverse mortgage world. Can you talk a little bit about that to begin with?
Yeah, definitely. Most people, including myself, had a negative opinion about reverse mortgages until I learned more about them. In 1988, under Ronald Reagan, that's when it actually became a product that is insured by the federal government. And it used to be private industries. My first one I did was Transamerica, got 25 years ago, and they took equity from you every year. And the reason they had a bad reputation is if your property value went up, when you went to sell, there's nothing for the family. Now, the 98% of reverse mortgages is an FHA insured product, protected, which we pay taxes to protect the seniors. It's an amazing product with a lot of benefits, not just for refinances, but purchases, which just started in '09. Before '09, they weren't used for purchases. I mean, we all see these commercials, Tom Selleck selling reverse mortgages, and they never talk about purchases because that's more involved. You have to have an agent. They just talk about refinances. But for purchases, it's a product that's protected. You have to go through counseling, and there's a lot of senior abuse. And so this is a government program that protects the seniors. And for many seniors, it's a great solution to allow them to live in their home or buy a home and be economically, financially stable. So yeah, it used to be snake oil. It used to be they take your equity. It was an equity share type thing, and it was kind of a scam. It really was. It's not the way it is now. So most people, it does take an education to get over that hump. And once people learn about it, they go, how come no one told me about this before? That's what's kind of weird about it.
Right. So if we're talking to our clients now as realtors, and we want to help our clients all we can, even if we're not going to get business out of it, in the interest of being that helpful person and maybe getting referrals as a result. If we are talking to someone that's struggling but love their house and have not considered, and what do they have to be? I think it's 62 and over. Tell us some of the
Yeah, the basic things. Let me tell you the basics. For the FHA product, it's 62 years or older. It has to be a primary residence. Okay. And the nice thing about the reverse mortgages, they're very easy to qualify for, unlike a traditional mortgage. You just have to have a basic income to cover the taxes and insurance. And even then, sometimes we get around that by having a set aside life expectancy. We have to have like $1,000 a month qualifies most people for reverse mortgage if they have that kind of income. And so if you have Social Security, that's usually all you need. So it's a very low bar to qualify for this. And another thing about the reverse mortgage, you own it. Think about a forward mortgage. When you go to pay off a mortgage, there's a balance, you pay it off. The reverse mortgage, the same thing. It's just a mortgage on your house. And you can't have more than one mortgage. The reverse mortgage would replace an existing mortgage if you were going to replace it. But when you buy a house, it's one mortgage. And then when it comes time to leave the house, either you die or go into an assisted care living or whatever, you've got to pay off the reverse mortgage. Get the balance, just like when you sell the house, the balance is the balance. The balance increases every year because you're not making a mortgage payment. So there's no mortgage payments. That's the beauty of it. So when you purchase a home, and I'll tell you, just kind of historically, when most people retire, what they do is they usually, let's just give an example. You sell your house for $1 million in the Bay Area, and more than that now, but let's say you do, and you have $600,000 equity. Normally, you just go and buy a $600,000 house because that's how you plan your retirement, because you can't afford a mortgage payment, because most people retiring don't have big incomes. I mean, some do, I get it, and they don't need a reverse mortgage, frankly. But people that have modest incomes, it really is a great vehicle. Let's say, example, you have a $4,000 a month income, as an example, in retirement. Well, the buyer goes, I have to pay cash for my next home. They move to Arizona, Florida, they buy mobile homes, they buy an inexpensive house. Well, reverse mortgage, instead of paying $600,000 cash, you can put up approximately 50% if you're 62 years old and have a mortgage with no mortgage payment the rest of your life. So instead of putting all the $600,000 into the new house, you can keep $300 in your pocket to help fund your retirement. And that's just a great option that people can retire earlier, and they didn't know they could, because they're figuring, Rick, every time I sit with a client, and I always bring up reverse mortgages, coming kind of on a mission. It's like having a vaccination and you have the cure, and you want to tell people, I might have the cure for your retirement. I got to tell you about this, or someone in your family. And it's that if I knew this, or I could have retired 5 years ago. I'm thinking I have nowhere to go, because I always ask people, well, what's your exit strategy? What are you going to do? I'm going to work forever. I can't afford to retire. And then they realize there's a way that you can retire, and a reverse mortgage can be a vehicle for a lot of people.
Okay, great. So let me just, I'm gonna mute everybody, Dawn, and then let's see, mute all. And then Dawn, you can unmute yourself. But one of the questions that comes up, Dawn, is are the interest rates higher because it's a reverse mortgage, or are they as competitive? And then you said the one thing that a lot of people are concerned about, which is that your mortgage balance goes up, and I imagine it goes up by the interest that's not paid, correct?
Exactly. And, this is an FHA product, and the interest rate is really kind of secondary. It's low. To give you an idea, fixed rate right now is like 3.3, 3.5. But the interest rate is really kind of secondary. This functions as a product that allows you to have no mortgage payment so you can retire comfortably. And it's without this product, I mean, it's not a matter of comparing interest rates, although they are low. But if on a regular mortgage, you have a mortgage payment.
Yeah.
Well, if you have a mortgage payment, that's a lot different than not having a mortgage payment. That's the whole purpose of this. I mean, I can tell you so many stories that this has been life-changing for people because it allows them to have cash flow and do the things they want in life as opposed to, eating peanut butter and all that. And I'm going to tell you another thing, a misconception. Most people, like I'm 64 now, so I'm eligible for this. 2 of my family members have already received reverse mortgages, but the idea when you get older that you want to protect your assets for your kids, and we all want to do that. But 95% of adult children, because we bring them into the whole thing, there's a counseling that you have to do. This isn't for everybody, but for the right people, it's an amazing solution. And the adult children, 95% of them want their parents to have a quality of life in the rest of their life. And then whether they leave something or not is secondary. Now, 5% are greedy little you-know-whats, and they want their parents to live on dog food and inherit. But that's not the majority of people. So we all want to leave stuff to our kids, but for gosh sake, your quality of life is so important. And a reverse mortgage allows you for so many reasons to, and your thing about, everybody thinks about refinancing, but we're talking today about buying. It allows your clients not to be stuck in the house that's a 2-story house, the neighborhood they don't like, because they don't think they have an option. And most people, when they get older, want to be closer to their kids, closer to the things they like, want to have a floor plan that meets their needs. They don't think there's a way to get there. Because we're here, if you've got half the money roughly, I mean, the older you get, the less money you need because it's based on life expectancy. So it allows a vehicle for someone to, I'm going to give you a real life example. 3 years ago, El Dorado Hills is one of the few counties before they changed the law recently, Prop 19, that allowed you to take your property taxes with you. I had a client in Pleasanton, and he only owned about $250 on his house. It was worth about $750. And I go, what's your plan? He's in his early 60s. He goes, well, I was laid off from Verizon, and I'm kind of doing a part-time driving job now. I'm collecting Social Security. I don't really have a plan. I want to retire to the foothills, but I got to pay cash. So I explained, look, and you can buy this house. And he ended up buying a house for $595,000. And he took his equity. He had about $350,000, $400,000 at the time after he netted after everything. And he then put down about half the money to buy the house. He got to transfer his property taxes, only $250 a month. So we moved into a house in El Dorado Hills with no mortgage payment, with out of monthly expense of $400 for his taxes and insurance, and kept over $300,000 in his pocket for retirement. He had no idea that was possible. And I told him this when I was signing papers on a refinance, asking what his future plans were. And he says, how come no one talks about this? And I said, well, I mean, I'm talking about it. I'm on a mission. So it changed his life, obviously. He retired early and he had a lot of money in the bank. He didn't know it was possible. It's a real story.
All right. So a couple of comments in the chat, Don. One, Jay Miley's a good friend of mine from Livermore, said, if you decide to make a mortgage payment, how much will go towards principal versus interest comparing to your traditional mortgage payment? Do some people actually make payments when they do a reverse mortgage for any reason, or?
Yes. There's 2 types of reverse mortgages, fixed and adjustable. The adjustable is a really amazing product because it's a line of credit, and that line of credit grows at the rate of whatever your interest rate is. So let's say at a 4% interest rate. That line of credit will grow 4% per year, no matter what the value of your house, can never take it away. So what you can do, another strategy, you can pay any part of your mortgage anytime you want. And some people have done this because they want the benefit of a tax write-off, because this is tax-free income if you have it, if you take money out. But let's say you want to pay the mortgage, and so you have $20,000 of interest. You can pay it in December, and then in January, give yourself the money back. you get the deduction of the interest because you don't get a deduction unless you pay the interest. And then you can take the money back out in January and be whole again and have the whole benefit of paying interest every year. Most people don't pay the interest or principal. They basically want the product because they don't want to have a mortgage payment. But yes, it gives you the flexibility of making any payment when you can make it. And it just goes right against the value of the principal balance. So 1 month you don't make a payment, 3 months you get a bonus, you put $5,000 towards it. It brings your line of credit down. So a line of credit is how that works. If it's a fixed rate, there's no line of credit, you don't have that option. The line of credit is highly recommended how this works. It gives you so many more options to fund it, and you come up with some money out of the blue for whatever happened, inheritance. You can pay down your line of credit, so that way your interest is not accruing at all. It only accrues on the balance. That's a great question. It can be used that way, and that's a strategy for a lot of people, yeah. And another thing about the saving the money, financial planners, many are getting more familiar with this. And one of the things they like is that their client doesn't use all their funds. Instead of letting them grow, they can control the funds and put less money into the house, but still eliminate the mortgage. So.
Okay, great. So what is the highest LTV that a refi can have? In other words, if is it a 50% or can they go up to 50% LTV? What is it?
Yeah, good question. It's let's start. FHA just has a limit. It's the 822,350. That means that's the value. And if your home is worth 800, it starts at 800, and the loan to value is going to be based on that. If your house is worth $1 million, it doesn't matter with the FHA product. It goes to 833. So that's a limit. That's nationwide, by the way. It's not county by county. It's 833, 822, 350 nationwide. So as an example, it's related to your age. At 62, it's about 50%. Yes, that's right around 50%. As you get older, like at 70 years old, now it's like about 55%. And as you get older, because it's all based on life expectancy. When you're 80 years old, it's more like 30%. It's all you need, 70%. So that's the main product. But I want to let you know there is a product which is used about 3-4% of the time in the United States on the high-end properties. And we can go up to $10 million on that. And that's a fixed rate only, higher rates. It's not a government product, but that can go anywhere from 50% to 30%, depending on the interest rate you choose. But I'm kind of focusing more on the FHA product, and that's the most commonly used. But in the Bay Area, I mean, $5 million property, there's reasons people want to stay in the home a couple more years before they sell, so that's something to keep in mind. But most people are talking about the FHA, reverse mortgage product.
All right, cool. So let's look at some of the other questions. This is good stuff. Jay Miley said there's a qualification for the line of credit, or is it kind of like the other one if you've just got $1,000 a month,
Well, you know what? Again, this is for refis or purchases. The line of credit threshold is very low. There's a financial analysis. 4 years ago, the government lost a lot of money. You guys may or may not know this, but Wells Fargo and Bank of America were giant players in the reverse mortgage space 10, 12 years ago. And with the mortgage meltdown and people were upside down, seniors didn't pay taxes and insurance, and they got foreclosed on by the big banks. So those big banks stopped doing them because they knew there's a small part of their business. So they got out of it because the seniors weren't paying that. So the government, FHA, HUD, made a financial threshold that you have to have enough to pay your taxes, insurance, and if you don't, you have to have enough equity to put a set aside. And if that's not the case, you have to have enough to pay your PG&E and basic expenses. So it depends how many people in the household. It could be $500 to $1,000 a month you need of income to qualify. So unlike a forward mortgage, it's so easy to qualify with a minor amount of income. Now, there's no co-borrowing here. It's a spouse and a husband, wife, or married couple, whatever. But that threshold is very low, but there is a threshold, but it's very easy to get to.
Okay, and is it if there's a brother sister, same thing? If they're brother sister on title, and one of them's over.
Well, they have to live in the house, both of them. As long as they live in the house.
Yeah.
there's no problem. I've done them for the brother, sister, father, son. They live in the house. Then they use the lower age, by the way. It's the lowest age of them. So if one's 62 and one's 82, they're using 62 for the calculations.
What if one's 62 and one's 60? You can't do a reverse mortgage?
You can, yes. There's which is based on the 60-year-old, and then there's rules when the 62-year-old dies about the spouse is not as old. They can't ever take money out of the house. So ideally, you can still do a loan if you're less than 62. You won't get the same proceeds because it's all based on life expectancy, and then you don't have the same rights to the loan once the senior passes away or leaves the house. But it can be done, but it's not often done that way.
Okay, cool. This is good stuff. And then we had a question about, is there a certification that a realtor can get to say they're a reverse mortgage expert, not necessarily doing the loan, but being an expert on convincing people to do a reverse mortgage loan? Is that what
I'm not aware of that. I know you could get a certification of a senior specialist, which I think would encompass that.
Okay.
But no, I'm not aware of that.
Okay, good. That's good stuff. So Don, when we're talking about what's it say here? Can the first purchase be a reverse mortgage, or is there a minimum occupancy requirement? Patrice, can you explain yourself a little bit on that? Unmute yourself and tell us what you mean by that.
Oh, yes. I was meaning that a person who is purchasing their first home that is over the age of 65, can they include somehow a reverse mortgage, or do they have to live there for a year first before they can qualify for a reverse mortgage?
No, he was
Okay.
reverse for purchase, but go ahead, Don. Answer.
Yeah, if you're over 62, not 65, you can use this mortgage, whether you're a first-time buyer or not. And just so you know, 10,000 baby boomers turn 62 every day in this country. It's amazing how many people this fits into it. And I'm sure a lot of your clients, as you know, the ones that are selling are older. But if you want to get a reverse mortgage, yeah, you can buy, you're talking about refinancing, you can buy a home and put a reverse mortgage on it after the fact too. You don't have to buy with a reverse mortgage. You can pay cash for the house and then put a reverse mortgage on later. That doesn't have to happen. But a lot of people like to preserve their money. But no, you can use it anytime as long as you're 62, but it's owner occupied only. Now it could be for a 2-unit, 3-unit, 4-unit, doesn't have, or even a mobile home. It doesn't have to be, just 1 unit, but it has to be owner occupied only. And anybody that's on the loan on title has to be over 62 and owner occupied as well. No co-borrower. By the way, a side thing, reverse mortgages on purchases, there are some rules. You can have no help with closing costs. The builder, the agent, the seller, nothing can be contributed. I have some rules. They're very simple, but a little bit different, not a giant difference, but compared to a forward regular purchase mortgage.
Oh, nice.
Hey, Rick, I have a question.
Yeah.
Bob?
Hold on 1 second, Bob. Thank you. Let's see. Tina was saying that the SRES, which is the Senior Residential Specialist course, does include a chapter on reverse mortgages, but it's an overview, not near as thorough as what Don's presenting. And go ahead, Bob, and then I'll go to some other things in the chat. Go ahead.
On the line of credit, Don, what is the charges on that? Once you don't take any money out, but you have it, the line of credit, is that annual fee or what's the deal?
Yeah,
just like any line of credit?
No, it's not. But one of the biggest negatives, if there is a negative of reverse mortgages, they're not inexpensive. And so, they charge 2 points. This is HUD, FHA, in order to keep the program, because they lost a lot of money. There's mortgage insurance on this. There's 2% up front, which is, it's not out of the pocket, but it's on the loan. And then there's a 0.5% per year of mortgage insurance. So whatever rate, like the rate on the adjustable now, let's just say it's like 2.3, 2.4. There's a 0.5% insurance on top of that. But you only accrue interest on your balance. So if your balance is $20,000, you're only accruing interest on $20,000. So if it's 5% interest, $1,000 a year that adds onto your balance. Not a big deal. But your line of credit, if you have 100,000, okay, that's 5,000 a year. That's adding on your balance. Well, if you took $100,000 out and your house is worth 800,000, well, adding 5,000 a year isn't going to do much. At the same time, hopefully your house appreciates. But if it doesn't, if it went down, it wouldn't even matter. let's say worst case scenario, and I want to, this is a very great benefit. Let's say things go real south. You maxed out your reverse mortgage and you're really a healthy person. You keep living, you're 90, you're 95. And all of a sudden values went down. They went down 50%. Well, the reverse mortgage, they can never take away your line of credit. It grows no matter what at the rate of your interest rate. And so even if you're upside down, unlike a forward mortgage, they stop your line of credit. This can never be stopped and it grows automatically. Now, let's say you pass away and you're 90. Let's say you owe $500,000 on your house and it's only worth $400,000. What FHA says, look, there's no recourse on this for your family, for your estate. In fact, family, we want you to keep the house. So we'll do this. We'll take 5% off the value and we'll take a short payoff instead of you having to sell the house. So if the 400 is the value, 400 is the value, yes, and you owe 500, we'll take 5% of 400, 20,000. We'll take 380 as a payoff, and you guys can keep it and just refinance it if you want to keep it in the family. But if you don't, we'll take it back upside down, no recourse at all. Just sign over the deed of trust, the estate. So we all pay taxes for this loan to help seniors. So it's got so many wonderful features to help the senior out. And for refinancing, that you can take part of the money, you don't have to take it all. And then in time, that line of credit grows every year, 4%, whatever. So it's a way to build up a giant line of credit that if you needed to have in-house care later on, now you can't live in your house forever. I mean, if you're lucky enough to die in your home, great. But if you go to assisted care or whatever, then you do have to get rid of the mortgage. You have to live there. At least one day a year, it has to be in your house. But most people go into assisted care, kind of don't come back, In that case, if you die or leave the house, they want you to refinance or pay off the house within 6 months. They'll give you 2 extensions if you need them, if you can't sell the house. So, but the one of the negative things is people do think that it's a recourse against the estate. It's not.
That's Don, that last part is so huge that a lot of people don't pay attention to that. And I'm so glad you brought it up. And that's the part that's so refreshing, that this is not snake oil. It's not, it's why I called this isn't your mama's reverse for purchase on the title of today's call, because, it's not the old fashioned snake oil stuff that FHA has even allowed for your home to go down and have you be short, meaning the house is worth less than the loan and it's still protected. So it's really, really an incredible product. Regina asked a good question. She said, when the reverse mortgage homeowner passes, what's the timeline for the surviving family to get it refinanced under their own name?
Well, I just mentioned you have 6 months to start with, and then they'll give you 2 extensions for 90 days if you need them.
Okay.
They're on it. Once someone passes, they're on it. They want you to get, they don't want that mortgage out there anymore. So that's a good question. But that's the main thing about what happens after someone dies. There's no doubt about it. But you're right. The government is really trying to make this a workable product so that people that are equity rich and income poor can have a good quality of life.
Right. Awesome.
You remember, Rick, when they passed that Prop 13, we were kids then, remember, but the idea of that Prop 13 was seniors on fixed incomes, their property taxes are going up dramatically because values are going up. And so the whole purpose of that was to allow seniors not to be taxed out of their houses.
Yeah.
So that's the same thing here. It's using your equity to pay at the end when you need it now to live on the quality of life.
Yeah. Now there was let's see, hold on. There was a question about, if the property is under a trust, does it have to come out in order to qualify for a reverse mortgage?
No, as long as the trust, the trust is the owner occupied and they're the trustor and settlers. It's their trust, a living trust only, which is same with forward mortgages. I mean, it has to be the people. It can't be someone else as a trustee. They're the trustee. They're the settler. It's their living trust. Like almost everybody has it that way.
Yeah. And I mean, I'm pretty sure if that's it, you can always put it back in the trust when it's out of it anyway. So yeah.
No, it's not a problem. You can have it in the trust.
Okay, cool. So now when you're looking at people the people that are out there, the benefits are increasing as they get older in terms of their LTV, et cetera, right? So what are some of the tricks, Don, that you're seeing used in the marketplace by realtors to use reverse mortgages to maybe gain more listings, like by maybe talking to people, as you said, that are living in 2-story homes? You call them, you talk to them about, did you realize that you could, use some of your equity and keep the rest in your bank account and go live in a 1-story home for the rest of your life with no payment, stuff like that? Are you seeing agents doing that in terms of calls and lead generating for listings?
I think, I've been in touch with Rick. In our company, we have a guy that does more reverse mortgages for purchases than anyone in the United States. He does 15 to 20 a month. And it's in South Utah, and it's mostly with builders. And so people coming to buy a new home, it's a big retirement area, and they come, let's say they sell a house in Chicago, 300,000, they 400,000. They go to buy a cash in South Utah. And so the builder says, hey, instead of the $300,000 house, why don't you go talk to Brandon? You maybe use other options. So instead of paying $300,000 cash and using all your cash, they can buy the $400,000 house and only put $200,000 down and keep $100 in their pocket, but buy the house they really want. I think what I've discovered is, unless you have a deep conversation one-on-one, which is a great reason to call your clients, because even if it's not them, everyone has family members this can apply to, that you're offering something that can alter their lives in a positive way by educating them. And so people will, let's say they want to move to Arizona or whatever in the country, but and they want to buy a nice home. They go, God, I'd love to get that $500,000 house, but I'm only going to have $200,000 or $300,000 to work with. You can buy the $500,000 house using this method. You can have your cake and eat it too. They had no idea it was possible. So to answer your question, I would be recommending, I would be reaching out. You always want to stay in touch with your clients anyway, and hopefully you can stay in touch with a conversation. I would, and I know coffee's a problem now because of the COVID, but when the coffee comes back, I would definitely have a phone conversation, do a coffee conversation about explaining some basics about this. Because once people hear about it, then their mind starts going, wow. And they start thinking about all the people they know that this could be something worth looking into. And that's how my business mostly comes from, like this, that people start referring someone and says, well, this worked for them. And it's amazing how it solves their problem. So, and I think it's a one-on-one conversation, which is a great opportunity, frankly. When you to your, your A clients, your best clients that you're always trying to stay in touch with them.
Okay, so first of all, let's see, who's not muted? Hold on. Let's see, mute all. Okay, so Don, remember to unmute yourself when I ask you the question, but a couple of things. For those of you who didn't hear, he was saying coffee, go out to coffee with someone is what he meant, not copy. I think somebody heard copy, C-O-P-Y. And he was saying because of COVID, obviously a lot of people don't go out to coffee anymore, but what he's alluding to is more coffees with people, more conversations. You can do them by Zoom, but it's something that I've been pushing since the beginning of COVID, probably not enough before COVID, is just reach out and talk to people. Reach out and talk to people. How are you doing? What's going on in your life? And then say what Dawn was mentioning is ask people, are you set up for retirement? And if they find out what they say and then decide, is this the time to talk to them about reverse mortgages? Remember, one of the things that we talk about on the Rick Jihad team all the time is how do we bring more value to our customer base? And remember, if your customer base is a millennial, then guess what? Their parent is over 62 usually, or in that field where in that area of time where they could probably use knowing this. Maybe their parents don't know, but your millennial client has a parent that they would love to tell them about. So there's no reason not to do that. Don, a really good question was from Regina is, can you, if you're under NOD on your current loan, but you have that, let's say, Social Security income, and there's enough equity, can you refi out of an NOD into a reverse mortgage?
Yes, that's a case by case. It's not a hard, fast rule about usually though the answer is no. Usually they want 2 years, like if you had a foreclosure or something like that as a rule. I have a loan right now where they're late 10 times in a row, and we're doing a reverse on them. And so that there's a little bit of credit. One thing I think one of the negative things about the reverse, they don't let you pay off debt in the escrow to qualify. You have to do it separately. A quick thing, Rick, I just reminded me another thing you mentioned about, like, if you have a parent and there's like siblings, 3 or 4, and the parent now needs money. Well, usually, 1 or 2 of the kids they're kicking in, the other one's not. I've done several refinances where the parent had plenty of equity, but they didn't have any money to have the in-house care. Then the kids are going, my gosh, I can't be there all the time. And so they got a reverse mortgage, and that way the money comes back to them later when they pass, but they're not forking out the money every month to take care of mom at home when she needs help. And usually there's always a couple freeloading brothers or sisters that don't kick in. So that's another thing. But we do it, it's a case by case, but no, if you're in a foreclosure situation, you're likely not going to get out of it. You're going to have to, probably sell, and you may have to wait to get the next place in a couple of years.
Okay, one last question, and I think you answered it before, but I'm still not clear. I know a lot of you are going to be thinking I'm talking about myself, but I actually know several people where they want to buy and they're over 62, but their significant other is significantly under 62 by a ways. How does that work?
Yeah, I mentioned that you can have a spouse that's under 62, but the benefit is based on the lower age, so you're going to get less benefit. And then if it's a line of credit, they can never have access to line of credit when the older person passes.
Yeah,
so it doesn't happen.
Yeah, I was talking more about purchase or refi.
Yeah,
so.
it's just less bang for the buck. You have to put more down payment. So you can have an 18-year-old spouse, but you're not going to get any benefit because the life expectancy is kind of long.
Right, but let's seriously talk about that, because not just me, but there are 2 other people on the call, the exact same situation, where one spouse is 63 and the other is 46, let's say.
Yeah.
So what happens? Is it a smaller LTV that happens, or you just can't get a reverse mortgage?
You can get it, but it's based on the LTV. It will be dramatically different because the 46-year-old is going to have a much longer life expectancy. So you're going to have to put a much bigger down payment to accomplish that.
Okay, I see.
What if the property is under trust? Are they going to still look at the age, or they're just going to evaluate the trust to qualify it?
Oh, no, they're always looking at the borrowers. The trust has to be a living trust, and that's just how title's taken. They still have to qualify based on their age, based on their income, based on residual income, based on their credit. The trust is just how they hold title.
Nice.
They're not, the trust isn't the one qualifying.
Nice. Okay. And Don, on the bigger loans that you said, I was thinking of a friend of mine also that on the bigger loans that are, you said, way over the 800, let's say into the millions.
Yes.
Those all have their own separate rules, which I can contact you about, or I can put that client in contact with you later. But
one thing about the bigger loans, it's 60, not 62. That's one thing.
Oh, okay.
And they allow you to pay off debt to qualify. Those are fixed rate only. There's no line of credit, and it's one lump sum period. And the interest rate is anywhere from 4.99 to 5.99. So there's a lot higher, but they still serve a purpose with the right situations, without a doubt. One last thing, this is an FHA loan, so it has to, appraisals are FHA on the government loan. So the condo, if it's a condo, it has to be an FHA approved condo. But on the other loans, they don't have to be approved by FHA. And so it's just the same appraiser that we use on a forward mortgage is for this mortgage as well. So.
Yeah. And Carla said, is it age based on who's on title or who's living in the house? It's the same thing, because if you're not living in the house, you don't count, right?
Exactly. You have to owner occupy. It's the youngest of the people on the loan that live in the house. Yes.
Okay, cool. All right.
Hey, Don, may I ask a quick question here?
Yeah, Tom.
A lot of senior homeowners have quite a bit of deferred maintenance on their home. They kind of let the place go to heck in a handbasket. Do health and safety issues have to be taken care of, or is there a set aside for that? How does that work out?
Yeah, you're talking about in a refinance. Yes, they can put a set aside to get it repaired within so many days, 30 days to do that. But you're right, it has to. you have to have basic, like it's an FHA approval. And if there's basic thing, that's one of the main reasons people take out these loans is for maintenance on their house. They can't afford to put the new roof on. You know, they don't have the money. And so, yes, those could be conditioned and to be done and funded after the loan closes on a refinance, if that's the case. But yeah, health and safety, just like an FHA appraisal on a forward mortgage, they'd be the same concerns on a reverse. It has the same.
And what about multifamily, like duplexes, triplexes, and fourplexes if the owners are living in one of the units?
Yes, that's perfectly fine.
Yeah, good. Okay, that is something that's surprising to me, but who asked that? I think Patty Recupero asked that. So good question, Patty. Yeah, so that's actually even pretty cool because then you can get, you know, you're gaining rent to help out. So awesome. Well, I am out of questions, guys. I think I am so sort of armed for doing good now with the information Dawn's given me today. Dawn, I put your info in the chat because several people asked about how to get a hold of you. Folks,
Sure.
if you just came on and you didn't see that, you can always email Gina, who's on the emails, about how to get Dawn's information. But I put his email address and I put his cell phone number in here for all of you to use. He's amazing. He takes great care of people. He has a great heart. Yeah, you'll really like working with him. So
Rick, would I recommend if I was in your shoes, I would say I'd call, you know, you have your A clients, B clients, C clients. I get on the phone with my A clients and have a talk and say, look, I just learned something today that really blew my mind, that it can really be a benefit to a lot of people. And it may or may not affect you, but I got to share it with you because if it does affect you, it's life-changing for some of your family. It gives you a reason of value and you're not selling anything. You tell them about something that can really help them. And I just learned about something that is really powerful because every time I do a reverse mortgage, it's life-changing. I'm not exaggerating. Now, my philosophy, you know, you guys love to do the first-time buyers. You can really make an impact. And, you know, like now, and I make fun of, you know, myself and realtors when we say, I help people get in the house, get their dreams. I go, look, if I died tomorrow, Rick, or you died tomorrow, our clients would still buy a house without us, let's face it. However, if they don't know about the reverse mortgage and we should explain how it could change their life, we changed their life. And without us, it wouldn't have happened. So I'm really excited. You can tell I'm excited about this because it is life-changing. And you don't have to be an expert, you guys. If you have their date of birth, the address, if they own anything on the mortgage, I mean, it's so simple to put proposals together and see the numbers and see how this works. We have a lot of great collateral information that is very helpful. We put together over the years. Our company's called First Reverse, and it's a division of Cherry Creek Mortgage. We're only one of 4 lenders in the United States that actually securitizes directly with Ginnie Mae. So we've been at this over 20 years doing reverse mortgages. So I have those conversations, and you don't have to be a giant expert, but if I send you a brochure, you'll be an expert just in 15 minutes reading the brochure. So
great.
Yeah.
And Don, could I get, would you be able to email Gina and I those links? And
yeah, I'll get you a bunch of the collateral stuff, yes.
Yeah, and then I'll send it out to all of you when we send out the email next week. Okay, guys? All right.
Perfect.
Wow, I never dreamed, Don, that there could be so many amazing questions about what you were talking about. So I can't thank you enough for being such an expert that there was no questions you couldn't answer. And really,
Let me ask one question, Rick. Most of the people, when I do a lot of seminars, almost 100% of the people when I start the seminar have a negative feeling about reverse mortgage. It's just, and at the end I ask the same question, and 100% of the people don't have a negative. I'm wondering, has anybody minds changed?
Yeah, unmute yourself and let them know, guys, that if this is something that you have suddenly become a big fan of. So, yeah, I think, Don, for me, I didn't even know, as much as I talked to you about reverse mortgages in the past, I didn't even know about the short sale part. That was so refreshing to hear, amazingly refreshing. So, yeah.
I'm excited about learning more about it. I didn't really have a negative. I just didn't have a knowledge really. So there was nothing negative going in, but yeah, I'm really excited about learning more.
Good.
Well, that's great. You know, the thing is, think about this. You're a real estate agent And think about the real estate agents that don't know about this. It's a disservice to the clients if you don't know about this, because it's a great solution, a real estate solution.
Yeah.
You know, and it's a win-win for everybody, for the agent, for the, you know, for the client. So.
Yeah, well, I'm in that age group where a lot of my friends are in that same age group. And so, yeah, it's definitely something I want to share.
Awesome.
I've
That's
even
great to
sit
hear.
with clients on the education piece, Don, because I really love this product. The challenge that I always see is with the owner's children. The heirs are like, oh, there goes my equity, my money, my inheritance. So I think that, honest to God, is the part that we need to educate is get that myth out of their future heirs mindset, because they get in the middle of the possibility for the owner for sure. That has been my experience.
Yeah, that's, like I said, I think it's about 5% feel that way. It's usually the senior that's worried about it more than the kids. Most kids are part of the decision that this is done, and they 95% of the time support it heavily when they understand how it works.
They
I
don't
agree
know
with
they can
that,
actually
John.
sit in the education with the parents, so they can really
Yeah.
learn and understand how it will work, but they just, you know, some of them just don't engage.
Well, the counseling is required, like I say, for 1 hour. There's 1 hour counseling. It's not on the phone, and it's usually it can be free, but these are HUD counselors, and sometimes it costs $150, and that can be added to the loan. So if someone gets a loan, they've gone through counseling to make sure they understand it and it fits what they're doing. Because none of us want to do anything for our client that doesn't benefit them. So they have a lot of safeguards. By the way, I want to mention some about power of attorney. It didn't come up, but you know, this is not like a normal loan. They're very skeptical about power of attorney for seniors. So, you know, because this happens a lot. Seniors, they want to make it convenient. Their kids say, oh, they don't hear that well. They don't this or that. They're very skeptical about power of attorney because of senior abuse. So if there's a power of attorney, there's got to be a real reason, like medical. Maybe they have dementia now, but you have to have doctors from when they didn't have dementia prove it. So it's not. That's one thing I want you to be aware of, because that comes up a lot, and it's not an easy thing to use power of attorney on reverse mortgages to protect the senior. That is, if it's needed for a real reason, there's a hoops you have to jump through to do it. That's all. I had one client. She was in her 90s, and in San Jose, they own a house free and clear. And she could understand, but her hand was very bad about writing. It took her 4 hours to sign the loan papers, because she had to but she couldn't use the power of attorney because mentally she was fine. And it was patient. We took our time, but you know, this is something that's different. Forward mortgage, you can have a power of attorney for any reason. You don't have to explain why. But the seniors, they don't want senior abuse by greedy children.
Yeah, good point. Well, guys, this has been amazing. We're coming up on 9:50. I want to respect your time. Don, thank you so much. Please make sure you send us that stuff, and then I'll send it out to all of these amazing people.
Perfect.
And keep in mind, everybody, that there's hundreds of other people that listen to the recordings of these. And so when we send those out, they're not just for the people on here. There's lots of other people who couldn't make the call that get to hear it. And it was an incredible call today, Don. And I definitely educated us all in a big way. So
Perfect.
yeah.
All right.
All right. Well, we'll see
Sounds
everybody
good.
next week. Thank you guys for joining us, and look for the emails. They come out every Wednesday in your email box, and look for spam. I doubt they are in spam because of the way we're sending them now, but keep your eye on them and invite a friend. Talk to you guys later.
All right. See you later.
Bye, everybody.
Thank you.
Bye.